Good afternoon. Thank you for tuning in today on this rainy Friday afternoon, but it is Friday, so that's the most important thing. You are listening to the Financial Chick Show, and I am the Financial Chick. My name is Denise Nostrom, the CEO and owner of Diversified Financial Solutions, a full-service independent financial planning firm located in Medford. Your Financial Chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety and stress about money. I hesitate because, my gosh, what a week it's been. So if you want to know more about me or my firm, you can check out my website at financialchickshow.com. We're also on Facebook and Instagram at Diversified Financial Solutions, so like our pages to get updates and see what is happening. So yes, it has been quite the week, huh? It's just been amazing, not even just in the financial world, but in the world of politics and just all around town, crime, and it just seems never ending. It seems like we want things to get better, and it just seems to be getting more complicated. But I'm sure that everybody listening is looking for insights or answers about what is happening. So first, I'm going to take it back a few weeks before we tackle what's going on right now. But not this past Friday, but the Friday before, I had Assemblyman Joe DiStefano with me to discuss the state of New York State. If you didn't get to hear the show, you will want to go to my website under the media tab to listen to the show. If you just scroll down to the bottom, you can listen to the most recent show. So what we found out there was that the good news is that the Long Island Expressway is finally going to be repaved. Finally, so that's like a great thing. Like we had mentioned, please be patient. We're going to have closures going off on the service road and everything like that, but the end game, I guess the pain before pleasure is that we've got to go through the tough stuff before we get a good roadway. But how does this deal with financial situations? Well, I can relate, and I'm sure many of you can, as we see everybody's on the side of the road on the Long Island Expressway with flat tires. This is all stuff that we have to use our resources, our financial resources for. So yeah, I've had a couple of tires that I had to get this year. And right now my windshield is cracked and I need to get that replaced too. So, and I know many of you can feel me, many of you that are probably driving and hitting potholes as we speak at this moment. So like I said, the good news is that is happening, and we'll hopefully have some good roadways to enjoy very, very soon. I just don't understand the government, however. So one of the things that Joe had mentioned, the Assemblyman said that Long Island received $157 million to repair one of our major roadways, right? Long Island Expressway, it's like the heart of Long Island. But the Buffalo Bills received $600 million to build a stadium, a football stadium. So I like sports just as much as the next person, but a sports arena versus a major thoroughfare that carries approximately, I did the research on this, 198,000 vehicles a day in Nassau and 150,000 vehicles a day in Suffolk. Governor Hochul hails from Buffalo. Enough said. Anyway, so last week I was traveling for business. I was in Florida, so I was there from the past Sunday to this last Friday. So I was not live on the air last Friday. I went down to meet some clients, and then I attended my annual broker-dealer conference. It's always a great time to catch up with financial advisors all over the country to exchange ideas, plus get the opportunity to hear from economists and money managers and see what's on their mind and see what's happening. So the great news is that I have access to all these people at any time of the year, not just at the annual event. But in a few weeks, I'm going to be having a certified financial analyst, portfolio manager, and professor at the Citadel, Paul Meeks, on the air with me to give us some idea and some of his insight of what's going on with these markets and everything that's happening. He was actually just on CNBC today discussing the market, and he shared some of his stock picks right now. So it's wonderful that I have this guy. He's a friend. We had a drink together at the conference, talked a lot, and so he's a really good person that I have available to me for my clients. So it's always nice to have that. And I did learn a lot at the conference, and excited to share the information with my clients and you, my radio listeners. I guess one amazing new idea that will help me solve a problem that I've been hearing often from clients, or not just recently, but through my whole career, is how to deal with capital gains. So if you're selling a business, selling a home, or just have stocks that have such a low cost basis that will, incur you to pay a lot of taxes, but you want to sell it, I have a solution. I will. I'm going to show you. In a couple of shows, I'm going to explain how you can defer these taxes, and in some cases, you can eliminate these capital gains as well. So this is just for accredited investors. So it is kind of a niche type of a product, but a lot of people are retiring, selling businesses, getting rid of houses, and have a lot of maybe not buying a new house or maybe downgrading, and they have a lot of gains. So this is something that's going to be pretty big changer. It was something that happened in the government in 2017. They put this into the laws. It's called Opportunity Zone. So I will definitely talk more about that. And as far as last Friday, back in 2019, I had the honor of being inducted into the Hall of Fame at my high school due to my business and my women's nonprofit and just other philanthropic things that I've done in the past. And last Friday was the first induction since mine back in 2019. So I was happy to see my cheerleader coach and good friend Nancy Goldfader, and also a good friend of mine, Denise Jefferson's brother Daryl, get inducted to the Hall of Fame. Denise was also inducted back in 2016 to the Hall of Fame as well. So Patrick Medford does a really great job in recognizing their people, and it's kind of cool to say that we've had some really amazing people come out of Patrick Medford. Michael Murphy, we have Kevin Connolly from Entourage. So pretty interesting. And Stroman from the Mets. I don't even know if he's on the Mets anymore, but so there's been a lot of really cool things. So that's why I was not here last Friday. But I am back this Friday, and my gosh, what a couple of weeks it's been, especially in the market. And it's been a rough one for pretty much everything, and we haven't seen this really since like 2008. The bond market's getting hit, the stock market's getting hit, and even cryptocurrency, which we weren't talking about in 2009, but cryptocurrency is getting hit quite a bit as well. So today I had received some information from one of the certified financial analysts and portfolio managers from my back office, Peter Nielsen. So I'm going to talk to you about some things, what he sees and what his opinions are of what's going on. So he's saying that recent stock market volatility has made investors jittery, of course, right? What has made it worse is the across-the-board sell-off that includes fixed income investments. So that's what I just mentioned, that it just wasn't a stock market event. With rates going up, it's a bond event as well. So far this year, the S&P is down 13.8%, and Bloomberg U.S. Aggregate Bond Index is down 10.2%. So just kind of wrap your head around that. Where do people go when they want to be conservative? They go to bonds. And this has not been a year to be a conservative investor. Well, the past couple of months hasn't been a year for any investor, but being a conservative investor with the bond market being down 10.2%. This gives investors that the feeling that there's really no place to hide. In addition, inflation is elevated, and the Federal Reserve is determined to pound it down. It's a difficult market environment. However, some perspective is super important. As we know, stocks do not go up in a straight line, but we and many investors have been accustomed to the environment of consistent equity market gains. So that's what I said in the past couple of shows, that this is the time everybody's been do-it-yourselfers for the past several years, because really all you had to do was be in the market and you were doing well. Things have changed. Now you really need to pick and choose and institute some strategies in your own portfolio to make sure that you're doing some preservation but still maintaining growth. So we, in the past couple of years, reversals have been few and far between, although it's been a little volatile, but not like what we've seen this year. It's just been absolutely insane. So I'm gonna finish the rest of that in a minute, but we're gonna run into the break, and I want to kind of keep my thoughts ahead of me. But the biggest thing I would say is inflation now going up over 8%. I think we're at 8.45%. Gas prices, they've been going up. I'll tell you a quick story about my husband. He was a truck driver, and the high cost of diesel prices, and well, Elon Musk bought Twitter. That's another thing too. There's so much. I could probably do a 2-hour show today. There's so many things to talk about. But you're listening to the Financial Chick Show, and I am the Financial Chick. We're closing into the commercial break, so stay tuned after, and we will talk more about what is going on in this marketplace. It has certainly been quite the ride, and we're hoping to diffuse some of the stress and anxiety that you're feeling, and it's all good. We will make it through this just as we've done other things, so stay tuned.
Okay, Denise, you got 2 minutes.
Okay, thank you. Hello, everybody who's out there. A little bit crazy today. So thank you for tuning in, and hopefully you'll get some good information today. Don't have all the answers, but I do have some solutions to kind of help you get through this without losing your mind.
1 minute. We got 30 seconds.
Okay, thank you. 30 seconds. Welcome back. This is Denise Nostrom, the Financial Chick. My company is in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. I'm here to help you on your financial journey. Over the years, things change, and I'm here to help you navigate all those changes. Well, we could certainly say that a lot of things are changing this year. I mean, a lot. I've been predicting this. I've been saying that this was going to be the turning point year, and my gosh, it certainly has been. So before the break, I was talking a little bit about Peter Nielsen. He's a certified financial analyst and a portfolio manager with my back office with some portfolios that we run. And he was talking about some of the stock market drawdowns and annual returns. So we talked about the S&P being down quite a bit, and that things were good the past couple of years. So people were feeling good, a little bit up and down, but nothing like we've seen of late. So, in reality, the stock market drawdowns are not uncommon, or having the market pull back. But since 1960, the S&P has had an intra-year decline greater than 10% in nearly 60% of all years. So the average intra-year drawdown going back to 1960 is 14.3%, and we're about there now. Like I indicated, that the S&P was down 13.8. So for those years when the market had an intra-year decline of more than 10%, it typically ended the year higher 60% of the time. Now, again, it's a whole jumble of numbers, right? So let's kind of pull that apart. So typically what happens when we do have these pullbacks, and they come all the time, every several years, it's kind of like the locust, right? So they come and, we have the market downturn, we have good times, we have bad times. We could go into all the different things of, maybe this wouldn't have been as severe with different decisions made by this administration, but we'll keep it on the financial tip right now. But the bottom line is that in the past, so let's take a look a couple of years. In 1979, the drawdown or the downturn of the market was 10.3, but the yearly return was actually up 12.3. 1980 was down 17.1, but the yearly return was 25.8. I'm going to bring it right to the current 2020. We were down at 33.9% with the pandemic during COVID-19, and we ended the year at 16.3% on a positive note. So Warren Buffett's mentor, Ben Graham, is quoted as saying, "In the short term, the market is a voting machine, but in the long run, it's a weighing machine." So in the short run, the stock market carries the mercurial concerns of all investors. In the long run, it reflects the increase in economic output. So, we're still going to buy our coffee at Starbucks. We're still going to have people eating at McDonald's. We're going to be buying Teslas. We're going to buy Apple phones. Unless all of these things stop on a dime, then we got problems. But the chances of that happening is not going to be the case. So it reflects the economic output, like I said, and he's 100% confident that the U.S. economy will continue to grow and that companies will see their earnings increase. This should help stocks continue to produce superior returns relative to bonds. Sometimes it requires an extra dose of patience and time. So we talked about the patience and time with the LIE. We're going to need patience and time with the market too. It's interesting. A couple calls I had this week. Actually, one was today. So I got a call. I'll be honest. It was a 30-something. So a young adult had called me today and said, I've been accruing all this money in my savings account, and this person's pretty in the know with stuff. He's pretty engaged and stuff. And he said, I know that I'm going to be getting maybe a little bit more interest on my savings account. He goes, but when inflation's at 8%, I really need to do a little bit more. So he's like, I'm going to add to my accounts right now. I want to add money while things are down. And that was just such a wonderful call today, because that's exactly what you should be doing. So I guess I taught him well, but he's good. He's pretty learned, and he does his research and stuff like that. So we talked about his portfolio. We looked at what he had going on, and we're going to top off some of the things that haven't done so well. Like one example, consumer discretionary. All right, consumer discretionary was hot during pandemic, because people were just buying stuff because they had nothing else to do. So they were just buying things. So things were really, really good. Typically when things are good, it goes down. So that's what it's doing right now. But we're going to get into that new cycle again down the line. Being a young person, he has time to do this. Now, I had another individual call, and an older person, in their 70s, and looking to, do their RMD and stuff like that. So we talked about their portfolio. And we identified a few things. They had real estate. This is a piece of the portfolio that I have been bringing way down or eliminating at this point. Not that I think the real estate is over just yet, but the cycle is certainly going to be coming to a close. With interest rates going up, for example, in January you could have had a 30-year mortgage for as low as 3.25%. Now, the 30-year mortgage is at 5.3, I believe, or 5.2%. So it's jumped quite a bit. 5.25. So with that in mind, a $250,000 mortgage would have been $1,290 a month. Now with the rate being at 5.25, you'd be paying $1,580 a month. So that's a big increase on a monthly basis of what you'd have to do. So, psychologically, house prices will probably come down because, people are going to start slowing. But when the rates go up, people are going to not want to buy a house either, because they'll be like, I could have gotten a much cheaper mortgage. Interesting dynamic, doesn't make a lot of logical sense sometimes, but this is what happens. So with my client that called today, I said, let's move out of the real estate. She was up year over year 10%. So I said, let's get that out, secure that in cash, and look for some opportunities. So it doesn't matter what age you're at, there are still opportunities in this marketplace. And then, of course, I had another call. Well, it happened to be the one woman's son, and he's been sitting on the fence, and he's like, I don't know, should I do this now? I go, this is a gift right now. You've accumulated a lot of money, you've been holding, you've been waiting, you've been procrastinating. I said, this is the time to do it. So he's going to start putting some money away for his retirement, or just do some investments at this point, and things are cheap. So it's a wonderful time. And I know I've said this before, and I don't want to sound like a broken record, but keep putting money into your plans. Don't stop the 401k, the 403b. This is a gift. If you have money on the sidelines, take a look at some things that you can do. It's a wonderful, wonderful time to invest. And again, we talked about the Fed funds rates going up. It went up 50 basis points, and bonds being down. I mean, we typically don't see bonds down 10%. I mean, that's really, really crazy. I don't know where to go. I got a lot of things to tell you. Well, let's do this. So I found an interesting thing. So back in 1992, which I can't even believe when you calculate it was 30 years ago. Like, it just seems like it was like 10 years ago, right? But we talk about inflation. So let's take a look at average cost of a few items. So a gallon of gas. Now this hits hard, right? So now that we're over like $5 or $4, almost $5. A gallon of gas back in 1992 was $1.05. if you do remember the last administration, we were not too far above that, just as an FYI. A new home back in 1992 was, this is of course national average, not New York or Florida, 122.5. So interesting, the average income at that year was $30,030. So things have changed quite a bit. But one of the things, speaking about oil, my husband came home this week, and he drives a truck and moves cars, and diesel fuel is now running over $6. I think it was $6.50. Big concern. He said one of his friends that he decided to just shut up his trucking company and fire all the employees, and he's going to sell his fleet because he just can't make it. I mean, with the prices. So we got to hold on tight. This is going to be a rough year. But like I said, there is opportunity. Just if you haven't looked at your numbers, if you haven't looked at your portfolio, you haven't looked at your goals, it's really time to do that. Super important, very, very important to do that. So give us a call, 631-758-8691 if you do want to meet and just take a look at what you have going on. I want to thank you for tuning in today. Like I said, keep your chin up. It's going to work out fine. Like the economist said, even at the conference, they're not seeing a recession at this point. Not to say that a recession is not in the cards, but right now in the near future, we're not seeing a recession. But keep your chin up. We got this. It's an election year, and the stakes could not be any higher. Just keep that in mind. And remember, let's do better and be better. And happy Mother's Day this weekend. So I'm hoping to take it way down and not do a whole lot on this Sunday either. But try to enjoy, and we will be back next Friday. And like I said, I'm going to have the economist coming up soon and a few guests that will be on the radio with me just to give you some information to get us through this rocky period. Like I said, this too shall pass. We've been there before, and I'm sure we'll be there again. But have a great weekend, and I'll see you next Friday. Thank you so much for tuning in today. I appreciate it, and happy Mother's Day to all the mothers and the dads doing double duty. And I will see you guys next Friday. Take care.